What's up, guys? All right, everybody's talking about the Nvidia. Everybody's speaking on the whole Nvidia earnings call, and it looks like it was good. Nvidia futures looks like it's up. But $140. I think it closed at like 130 something. Let's see. Yeah, be lying.
Just moments ago, and for our chart of the day now, we're taking a look at just how much the broader market depends on the AI giant. Yahoo Finance's Julie Hyman joins us now with a closer look. Julie Hyman joins us now with a closer look.
That's right. We have a special Nvidia edition of Chart of the Day. This coming to us via Ryan Grabinski over at Strategas, and he crunched the numbers to figure out exactly how much Nvidia has accounted for the overall earnings power of the S&P 500 over the past few years. We've sliced and diced this kind of stuff all different ways. This is a different flavor for us. So if you look at the total earnings of the S&P 500 and you look at what Nvidia accounts for last quarter, it was 3.9%. So on an individual basis, that is a huge number. And it's also huge considering how much it has increased, like everything else related to Nvidia. It's gone up from about 0.5%, say as recently as 2019, to 3.9% now. So huge weighting, both because of its size and market cap, but also because of the amount of earnings that this company generates here. Now, speaking of its size and market cap, that, of course, is nothing to sneeze at either. Our Josh Schaefer has put out a lot of charts and done a lot of number crunching on this as well. And if you go back to November 2022, Nvidia has accounted for 17% of the gains that we've seen in the S&P 500. Of course, the gains that we've seen have really been powered by the Magnificent Seven overall, but Nvidia single-handedly has accounted for a lot of those gains. And it's not just about sort of looking to the future, looking what may be revenue going forward. It's actual earnings power that has then translated into earnings and then stock gains for Nvidia. Although, as we have been speaking about this year, that path has gotten a lot rockier between the advent of DeepSeek, between these export controls. But obviously, the stock has at least initially been reacting well to the latest earnings that we have gotten. Josh?
Thank you, Julie. Well, Nvidia, like most chip makers, has struggled with geopolitical concerns, tariff policies, and global marketplace risks. Our next guest is a geopolitical strategist who works with businesses and governments to help mitigate risk. Riva Gujan is a director at Rhodium Group. It's a research and advisory firm focusing on global challenges and data analysis. Riva, it is great to see you as always. So let me get your take, Riva, on this Nvidia report, and specifically, Riva, what do you make of what they're telling us about business in China?
Well, they are certainly lamenting declining business in China due to the H-20 ban. As we know, Jensen referred to that as a deeply painful hit, affecting some 15 billion in potential sales of the China market. So obviously, they're not thrilled about that, but it was a long time coming, right? And Nvidia is also trying to use a lot of momentum in the moment from Trump's overhaul of the Biden era AI diffusion rule, which opens up third markets for Nvidia to deploy its GPUs while still closing off China. But they're trying to use that momentum to also push for a broader easing of chip controls on China directly. There are just a lot of reasons why I don't think that latter part is going to happen.
Well, and Riva, Nvidia continues to try to sort of get around these export controls. There's been reporting that it's developing another chip to ship into China, although it did say in a filing today that it might be unable to provide and create that product that would be a competitive one in China. Do you think it does succeed in sort of getting around the rules as it has been?
It's tough. I mean, there is a cat and mouse game between BIS regulators at Commerce on the one hand and Nvidia on the other. Of course, Nvidia is going to be the prime target under scrutiny for the design of any potential controls. And so, with this, the kind of variant of the Blackwell chip for the China market, from what we can tell, right, they have designed it to strip down the memory bandwidth by more than half compared to the original H20. They designed this without any advanced CoWoS, advanced packaging technology. So it's a stripped down chip, and it is going to come at a discount, but this is where you also have Huawei with a competitive edge, offering discounted chips that are also going to be at higher performance.
Riva, President Trump right now does seem to be a fan of Jensen Huang. You saw them in the Middle East together. That's a nice place for Jensen to be. I'm wondering how you think Jensen Huang maybe could try and capitalize on that relationship, capitalize on that friendship, Riva.
Well, it's a mixed bag, right? There are a number of tech influencers surrounding the president, and he's hearing from all of them. But there are also lines being drawn, and I think the message here for a company like Nvidia and others is focus on the ex-China market for your growth, right? Don't bank on that market for your future. That AI infrastructure build-outs have to happen all around the world. Jensen has taken this message globally of this idea of AI sovereignty, and he wants NVIDIA to be at the epicenter of those build-outs. From a policy perspective, the White House agrees and says, this is the time to lock in those AI infrastructure dependencies so that it's U.S. made and designed chips and U.S. hyperscalers that are leading these build-outs globally, but not in China. Right. And so that's the catch here. So whenever you're looking at any one of these tech influencers, there's always going to be some give and take on how far that influence actually goes.
And Riva, speaking of give and take, remind us where you stand in terms of whether these export controls are the right way to go, whether you're balancing effectively driving China to develop its own homegrown industry versus this sort of national security concerns on the U.S. side of shipping these chips in. Kind of where do you come out on that balance?
I mean, there are a lot of folks who will say that, look, it's better to keep Chinese companies dependent on U.S. technology. And so if a company like NVIDIA can offer a more superior chip, then let it sell into this market freely, and that the U.S. can then harness that strategic dependence for the longer term, as Chinese companies would prefer the better product. Now, the counter argument to that is that, look, when it comes to China's tech self-reliance goals, those are already working on steroids at this point, right? Where the directives from the state is to any company in China to say, don't rely on or don't bank your future on access to advanced U.S. technology. Assume that it won't be there and do everything you can to accelerate your production towards self-reliance. And you're seeing some really interesting things from Chinese memory chip makers like CXMT, which is not yet on the BIS entity list, but probably will be soon. But they are really driving toward just advanced memory, HBM, trying to gear toward AI development overall. And so this is really a test of China's industrial policy, whether it's going to apply lessons learned from previous rounds where there was a lot of waste and corruption, and whether these external factors like U.S. chip controls are going to drive more focus, smarter money flows this time around to yield real breakthroughs. But the U.S. chip controls are a real barrier, and it appears that they're only going to tighten further.
Riva, always good to see you and have you on the show. Thanks so much for your time.
Thank you, Josh.
We are just a few moments away here from NVIDIA's earnings call, and we're now joined by Daniel Newman, Futurum CEO, as well as Bob O'Donnell, Technalysis Research President, and
this is
Yahoo Finance's Dan
the
Howard.
stock
What
right
a
now.
team.
Look at that.
Wow.
Dan,
Dan's and a Bob.
Unbelievable.
It's
Dan, I
getting
will start with
crazy.
you. Very interested to get your take. Give me the Dan Newman take on the NVIDIA results and report. With the stock, I should mention, we're up
Look at
over
this.
5% here in the after hours.
Yeah, I think while everyone thought we were going to get a beat, there was some people that were bracing for the worst. We knew the China risks were there. We didn't know the write-down ended up being a little bit less than expected. Although I do think the guide actually being lower than what's expected maybe surprised a few people, but you see that $8 billion coming off the top, and that had a big influence. I think we're going to spend the next quarter continuing to have this debate, but between sovereign AI, between the access and opportunities in the Middle East and in other parts of the world to sell, Nvidia chips, I think the significant opportunities for Nvidia outweigh the risk. They outweigh some of the concerns, the demand for AI. And here's a couple little other tidbits, Josh. They did very well in every other segment. Jensen spent the whole year now so far talking about physical AI, robotics, getting back to autonomy and gaming. All those things performed incredibly well. 72%, I believe, was up on their ADAS and on their vehicle business. That hadn't even been talked about for a few quarters. And networking, by the way, saved the day. It actually covered the gap and allowed the data center business to beat. So you have to feel good about where it stands. We had a really good run of earnings from all the other Mag 7 companies, almost all. Tesla was a little spotty. And so we were setting this up to go well. But if it went anything but really well, the whole market would have fallen. You can see the market's happy with the result.
Well, and it's interesting that even when things go really well, that's no guarantee that the shares will go up, as we have seen in the past, most definitely. Dan Halley, give us your final thoughts before we get to the call in a few minutes here.
Yeah, I think as Dan pointed out, that
Tesla's
$4.5
booming
billion
too, look.
charge coming in lower than the 5.5 that was expected.
Is
Just the
following
ability for
Nvidia.
to, as I said before, repurpose parts
What
of those
the
chips
hell?
is incredibly important. And looking forward, we'll have to see if they're able to do that with existing inventory. Or, they mentioned that they're expecting to miss out on about $8 billion in sales of H20s due to that ban in Q2. So what that means now going forward, I think will be important. And how they're repurposing those chips will also be something to look out for. And then gaming did surprisingly well. That's just tangential to this kind of, it feels like at this point, but it beat on expectations and jumped pretty high. So an interesting move on that part.
All right, Bob, so you're now a financial analyst. You're on the call. You have an opportunity to ask Jensen himself a couple questions, 2 or 3. What's top of mind?
Well, I'm going to go back to some of the things I brought up earlier. I want to know when he expects to see the enterprise AI stuff hit. I want to hear more about, Dan brought up autonomy on the automotive side, but obviously the robotics thing is the big question. So when do those things start to hit? When do we start to see more software revenue start to hit from all the work that they've been doing there? I still feel like those are the long-term benefits that NVIDIA has, and so those would be the things I would ask.
All right, and let's go to the call now. Colette Kress, the CFO, Chief Financial Officer of NVIDIA, is speaking now. Let's listen in.
Although our H20 has been in the market for over a year and does not have a market outside of China, the new export controls on H20 did not provide a grace period to allow us to sell through our inventory. In Q1, we recognized $4.6 billion in H20 revenue, which occurred prior to April 9th, but also recognized a $4.5 billion charge as we wrote down inventory and purchase obligations tied to orders we had received prior to April 9th. We were unable to ship $2.5 billion in H20 revenue in the first quarter due to the new export controls. The $4.5 billion charge was less than what we initially anticipated as we were able to reuse certain materials. We are still evaluating our limited options to supply data center compute products compliant with the US government's revised export control rules. Losing access to the China AI accelerator market, which we believe will grow to nearly $50 billion, would have a material adverse impact on our business going forward and benefit our foreign competitors in China and worldwide. Our Blackwell ramp, the fastest in our company's history, drove a 73% year-on-year increase in data center revenue. Blackwell contributed nearly 70% of data center compute revenue in the quarter, with a transition from Hopper nearly complete. The introduction of GB200 NVL was a fundamental architectural change to enable data center scale workloads and to achieve the lowest cost per inference token. While these systems are complex to build, we have seen a significant improvement in manufacturing yields and rack shipments are moving to strong rates to end customers. GB200 NVL racks are now generally available for model builders, enterprises, and sovereign customers to develop and deploy AI. On average, major hyperscalers are each deploying nearly 1,000 NVL 72 racks, or 72,000 Blackwell GPUs per week, and are on track to further ramp output this quarter. Microsoft, for example, has already deployed tens of thousands of Blackwell GPUs and is expected to ramp to hundreds of thousands of GB200s with OpenAI as one of its key customers. Key learnings from the GB200 ramp will
What up,
allow
Bert?
for a smooth transition to the next phase of our product roadmap, Blackwell Ultra. Sampling of GB300 systems began earlier this month at the major CSPs, and we expect production shipments to commerce later this quarter. GB300 will leverage the same architecture, same physical footprint, and the same electrical and mechanical specifications as GB200. The GB300 drop-in design will allow CSPs to seamlessly transition their systems and manufacturing used for GB200 while maintaining high yields. B300 GPUs with 50% more HBM will deliver another 50% increase in dense FP4 inference compute performance compared to the B200. We remain committed to our annual product cadence, with our roadmap extending through 2028, tightly aligned with the multiple year planning cycles of our customers. We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1, a 5-fold increase on a year-over-year basis. This exponential growth in Azure OpenAI is representative of strong demand for Azure AI Foundry, as well as other AI services across Microsoft's platform. Inference serving startups are now serving models using B200, tripling their token generation rate and corresponding revenues for high-value reasoning models such as DeepSeek R1, as reported by Artificial Analysis. Nvidia Dynamo on Blackwell NVL72 turbocharges AI inference throughput by 30x for the new reasoning models sweeping the industry. Developer engagements increased, with adoption ranging from LLM providers such as Perplexity to financial services institutions such as Capital One, who reduced agentic chatbot latency by 5x with Dynamo. In the latest MLPerf inference results, we submitted our first results using GB200 NVL72, delivering up to 30x higher inference
Stuff next level
compared to our 8 GPU H200 submission on the challenging Llama 3.1 benchmark. This feat was achieved through a combination of tripling the performance per GPU, as well as 9x more GPUs, all connected on a single NVLink domain. And while Blackwell is still early in its life cycle, software optimizations have already improved its performance by 1.5x in the last month alone. We expect to continue improving the performance of Blackwell through its operational life, as we have done with Hopper and Ampere. For example, we increased the inference performance of Hopper by 4 times over 2 years. This is the benefit of NVIDIA's programmable CUDA architecture and rich ecosystem. The pace and scale of AI factory deployments are accelerating, with nearly 100 NVIDIA-powered AI factories in flight this quarter, a 2-fold increase year over year, with the average number of GPUs powering each factory also doubling in the same period. And more AI factory projects are starting across industries and geographies. NVIDIA's full-stack architecture is underpinning AI factory deployments as industry leaders like AT&T, BYD, Capital One, Foxconn, MediaTek, and Telenor are strategically vital sovereign clouds like those recently announced in Saudi Arabia, Taiwan, and the UAE. We have a line of sight to projects requiring tens of gigawatts of Nvidia AI infrastructure in the not too distant future. The transition from generative to agentic.
Here comes Trump, about to ruin it all. Here comes Trump, about to ruin it all. Look. Oh, let me unmute.
Chip designers.
Sella has the details. Hi, Megan.
Hey, Morgan, that's right. The news here being that the Trump administration has told U.S. chip designers to stop selling their software to Chinese groups. Now, that's according to the Financial Times, citing several people familiar with the matter. They say the Commerce Department sent letters to electronic design automation groups, that those include Cadence, Synopsys, and Siemens EDA, all of which had been down initially, now back up, it looks like, after hours. But they say it's not clear that all electronic design automation groups got this letter. But this is, of course, the latest step as the Trump administration is looking at different ways, continuing the Biden administration's moves to try to slow the Chinese rollout of advanced AI systems. Now, I spoke with people inside the building here about this story, and a Commerce Department official on background told me this, saying the Commerce Department is reviewing exports of strategic significance to China, that in some cases, Commerce has suspended existing export licenses or imposed additional license requirements while the review is pending. So not a specific confirmation or a denial of this story here, but clearly there is some action going on, and we have seen so far in the last 30 minutes or so the impact on those stocks.
And improved response time by 10x.
There are also big questions about how Trump's trade
NASDAQ
war
realized a 30% improvement in accuracy and response time in its AI platform's search capabilities. And Shell's custom LLM achieved a 30% increase in accuracy when trained with Nvidia NeMo. NeMo's parallelism techniques accelerated model training time by 20% when compared to other frameworks. We also announced a partnership with Yum Brands, the world's largest restaurant company, to bring Nvidia AI to 500 of its restaurants this year and expanding to 61,000 restaurants over time to streamline order taking, optimize operations, and enhance service across its restaurants. For AI-powered cybersecurity, leading companies like Checkpoint, CloudStrike, and Palo Alto Networks are using NVIDIA's AI security and software stack to build, optimize, and secure agentic workflows, with CloudStrike realizing 2x faster detection triage with 50% less compute cost. Moving to networking, sequential growth in networking resumed in Q1 with revenue up 64% quarter over quarter to $5 billion. Our customers continue to leverage our platform to efficiently scale up and scale out AI factory workloads. We created the world's fastest switch, NVLink. For scale up, our NVLink compute fabric in its 5th generation offers 14x the bandwidth of PCIe Gen 5. NVLink 72 carries 130 terabytes per second of bandwidth in a single rack, equivalent to the entirety of the world's peak internet traffic. NVLink is a new growth vector and is off to a great start, with Q1 shipments exceeding $1 billion. At Computex, we announced NVLink Fusion. Hyperscale customers can now build semi-custom CCUs and accelerators that connect directly to the NVIDIA platform with NVLink. We are now enabling key partners, including ASIC providers such as MediaTek, Marvell, Alchip Technologies, and Astera Labs, as well as CPU suppliers such as Fujitsu and Qualcomm, to leverage NVLink Fusion to connect our respective ecosystems. For scale out, our enhanced Ethernet offerings deliver the highest throughput, lowest latency networking for AI. Spectrum X posted strong sequential and year-on-year growth and is now annualizing over $8 billion in revenue. Adoption is widespread across major CSPs and consumer internet companies, including CoreWeave, Microsoft Azure, Oracle Cloud, and xAI. This quarter, we added Google Cloud and Meta to the growing list of Spectrum X customers. We introduced Spectrum X and Quantum X silicon photonics switches featuring the world's most advanced co-packaged optics. These platforms will enable next-level AI factory scaling to millions of GPUs through the increasingly power efficiency by 3.5x and network resiliency by 10x, while accelerating customer time to market by 1.3x. Transitioning to a quick summary of our revenue by geography. China, as a percentage of our data center revenue, was slightly below our expectations and down sequentially due to H20 export licensing controls. For Q2, we expect a meaningful decrease in China data center revenue. As a reminder, while Singapore represented nearly 20% of our Q1 build revenue, as many of our large customers use Singapore for centralized invoicing, our products are almost always shipped elsewhere. Note that over 99% of H100, H200, and Blackwell data center compute revenue billed to Singapore was for orders from US-based customers. Moving to gaming and AI PCs. Gaming revenue was a record $3.8 billion, increasing 48% sequentially and 42% year on year. Strong adoption by gamers, creatives, and AI enthusiasts have made Blackwell our fastest ramp ever. Against a backdrop of robust demand, we greatly improved our supply and availability in Q1 and expect to continue these efforts in Q2. AI is transforming PC and creator and gamers. With a 100 million user installed base, GeForce represents the largest footprint for PC developers. This quarter, we added to our AI PC laptop offerings, including models capable of running Microsoft's Copilot+. This past quarter, we brought Blackwell architecture to mainstream gaming with its launch of GeForce RTX 5060 and 5060 Ti, starting at just
she sound like AI. Shit.
The RTX 5060 also debuted in laptops starting at $1,099. These systems that double the frame rate and slash latency. These GeForce RTX 5060 and 5060 Ti desktop GPUs and laptops are now available. In console gaming, the recently unveiled Nintendo Switch 2 leverages Nvidia's neural rendering and AI technologies, including next-generation custom RTX GPUs with DLSS technology, to deliver a giant leap in gaming performance to millions of players worldwide. Nintendo has shipped over 150 million Switch consoles to date, making it one of the most successful gaming systems in history. Moving to pro visualization. Revenue of $509 million was flat sequentially and up 19% year on year. Tariff-related uncertainty temporarily impacted Q1 systems, and demand for our AI workstations is strong, and we expect sequential revenue growth to resume in Q2. NVIDIA DGX Spark and Station revolutionized personal computing by putting the power of an AI supercomputer in a desktop form factor. DGX Spark delivers up to 1 petaflop of AI compute, while DGX Station offers an incredible 20 petaflops and is powered by the GB300 superchip. DGX Spark will be available in calendar Q3.
All right. Let's watch this real quick. Where is it? Not what I meant to do.
Robotic fleet management are being leveraged in Kion Group, Pegatron, Accenture, and other leading companies to enhance industrial operations. At Computex, we showcased Omniverse's great traction with technology manufacturing leaders, including TSMC, Quanta, Foxconn, Pegatron. Using Omniverse,
I like
TSMC saves months in work by designing fabs virtually. Foxconn accelerates thermal simulations by 150x, and Pegatron reduced assembly line defects rates.
Man, they're going into detail, but let's watch this real quick.
A few things. The loss of revenue to China. They're talking about an $8 billion headwind there. I think that's a little bit worse than people expected. I mean, having said that, the fact that that number is so big and they're still holding revenue steady, I think is really impressive. The other thing I'd point to is the gross margin line. Gross margins are going up. I would have expected that China revenue would also have a higher gross margin. So they're also working against that gross margin headwind and still able to improve gross margins. I think those are the two things that really stand out to me.
All right, I'm going to follow up on what you said about gross margin, because the reported gross margin on an adjusted basis for the first quarter was 61%. Analysts were looking for 71%. And the goal, according to the CFO, was to get the gross margin back to mid 70% range by the end of the year. Are we still on track for that, do you think?
I think so. Just again, that it's really the adjusted margin, right? So you need to take out the headwind from them writing off inventory to get an apples to apples comparison. And it looks like gross margins are moving up again. And I also would point again to that China headwind. That was a product that wouldn't have been affected by the difficult ramp to Blackwell. So ostensibly would have had a higher gross margin contribution. So that going away becomes a bit of a headwind. The fact that they're working through that and growing gross margins, I think, is a great sign for the company.
Is there a sense here, Matt, when we talk about the development costs that have gone into it, I know there was some concern, is that kind of behind it? I know there's still ongoing costs that are always going to be associated with, but kind of that bulk, that front load of that, is that behind the company now?
And sorry, you mean the development costs for
the Blackwell, yeah.
Yeah, so my understanding is once we got past January, February timeframe, things really started to improve. And so since that point, I think they're seeing yields improve at TSM. I think their customers are having fewer failures. And so all of that helps them on the gross margin side of things.
So when we talk about what the company will try to articulate as far as for the long term, I don't just necessarily mean for the next couple of quarters, and we have to wait for the conference call, which is at the top of the hour. What exactly do you want them to articulate? Is it selling more Blackwell? Is it a broader universe of customers beyond what we have? Is it some sort of easing of U.S.-China relations that would allow it to penetrate that market? What?
So, it's really hard because Jensen's always so positive about the future of AI. Now, having said that, the concerns have always been, what does spending look like next year? Where do applications using AI show up, particularly given all of the spending that's happening to support AI? And I think that there are a couple really positive messages there, and I think we'll talk about agentic AI, creating those use cases. And then in terms of spend, I think they can point to all these new contracts that have been signed with sovereign nations over the last month, 2 months, 3 months as being really additive to that hyperscale base that supported them, and also highlighting exactly how important the world sees AI as being.
Hey, Matt, I'm just going to interrupt you for just 1 second here. We need to correct a few numbers. Scarlett, why don't you go ahead here? There are a few numbers that had crossed the wire a little bit earlier. There are a few corrections to that, and we just want to make sure we're very clear on what these numbers are. Scarlett.
Right. So I'm looking at first quarter adjusted EPS. 96 cents is the reported number. Analysts were looking for 93 cents. So by that metric, we are looking at a beat for the first quarter. Again, this is for the quarter that ended. First quarter adjusted gross margin was 71.3%. Analysts were looking for 71%. So that is slightly higher than anticipated and pretty much where the company guided to. In addition, the first quarter data center revenue also meets analyst estimates as well. So again, a couple of corrections here on the first quarter adjusted EPS, adjusted gross margin, both coming in higher than anticipated, and data center revenue meeting analyst estimates. Matt, in terms of what Jensen Huang is likely to say on the conference call, what kind of detail do you expect he is able to go into when it comes to the outlook here for China?
I think certainly they'll reiterate that they don't expect to sell the H20 into China, right? We've seen the write-off, so they're kind of stuck there. Obviously, there have been press reports about a potential successor to that chip based on Blackwell architecture. I don't know whether they'll go in depth around that. They have talked in the past about having given up only a portion of the China opportunity. So you could see them come in, or him come in and talk about, with the new restrictions, this is how much of China we can capture. But I also suggest that at this point, when you look at not consensus necessarily, because for instance, I haven't adjusted my estimates, but when you look at street estimates, I think there's been an assumption out there that they might not get.
Hey, we gotta. Jensen Huang is on the call now.
Today, however, the $50 billion China market is effectively closed to U.S. industry. The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option. China's AI moves on with or without US chips. It has the compute to train and deploy advanced models. The question is not whether China will have AI. It already does. The question is whether one of the world's largest AI markets will run on American platforms. Shielding Chinese chip makers from US competition only strengthens them abroad and weakens America's position. Export restrictions have spurred China's innovation and scale. The AI race is not just about chips. It's about which stack the world runs on. As that stack grows to include 6G and quantum, US global infrastructure leadership is at stake. The US has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capability. In the end, the platform that wins the AI developers wins AI. Export controls should strengthen US platforms, not drive half of the world's AI talent to rivals. On DeepSeek and QN from China are among the best open source AI models. Released freely, they've gained traction across the US, Europe, and beyond. DeepSeek R1, like ChatGPT, introduced reasoning AI that produces better answers the longer it thinks. Reasoning AI enables step-by-step problem solving, planning, and tool use, turning models into intelligent agents. Reasoning is compute intensive, requires hundreds to thousands of times more tokens per task than previous one-shot inference. Reasoning models are driving a step function surge in inference demand. AI scaling laws remain firmly intact, not only for training, but now inference too requires massive scale compute. DeepSeek also underscores the strategic value of open source AI. When popular models are trained and optimized on US platforms, it drives usage, feedback, and continuous improvement, reinforcing American leadership across the stack. US platforms must remain the preferred platform for open source AI. That means supporting collaboration with top developers globally, including in China. America wins when models like DeepSeek and QN runs best on American infrastructure. Regarding onshore manufacturing, President Trump has outlined a bold vision to reshore advanced manufacturing, create jobs, and strengthen national security. Future plants will be highly computerized in robotics. We share this vision. TSMC is building 6 fabs and 2 advanced packaging plants in Arizona to make chips for Nvidia. Process qualification is underway, with volume production expected by year-end. Spill and Amcor are also investing in Arizona, constructing packaging, assembly, and test facilities. In Houston, we're partnering with Foxconn to construct a 1 million square foot factory to build AI supercomputers. Wistron is building a similar plant in Fort Worth, Texas. To encourage and support these investments, we've made substantial long-term purchase commitments, a deep investment in America's AI manufacturing future. Our goal, from chip to supercomputer, built in America within a year. Each GB200 NVLink 72 racks contains 1.2 million components and weighs nearly 2 tons. No one has produced supercomputers on this scale. Our partners are doing an extraordinary job. On AI diffusion rule, President Trump rescinded the AI diffusion rule, calling it counterproductive, and proposed a new policy to promote U.S. AI tech with trusted partners. On his Middle East tour, he announced historic investments. I was honored to join him in announcing a 500 megawatt AI infrastructure project in Saudi Arabia and a 5 gigawatt AI campus in the UAE. President Trump wants U.S. tech to lead. The deals he announced are wins for America, creating jobs, advancing infrastructure, generating tax revenue, and reducing the U.S. trade deficit. The U.S. will always be NVIDIA's largest market and home to the largest installed base of our infrastructure. Every nation now sees AI as core to the next industrial revolution, a new industry that produces intelligence and essential infrastructure for every economy. Countries are racing to build national AI platforms to elevate their digital capabilities. At Computex, we announced Taiwan's first AI factory in partnership with Foxconn and the Taiwan government. Last week, I was in Sweden to launch its first national AI infrastructure. Japan, Korea, India, Canada, France, the UK, Germany, Italy, Spain, and more are now building national AI factories to empower startups, industries, and societies. Sovereign AI is a new growth engine for NVIDIA. Toshiya, back to you. Thank you.
Operator, we will now open the call for questions. Would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. You guys have talked about this scaling up of inference around reasoning models for at least a year now, and we've really seen that come to fruition as you talked about. We've heard it from your customers. Can you give us a sense for how much of that demand you're able to serve, and give us a sense for maybe how big the inference business is for you guys, and do we need full on NVL72 rack scale solutions for reasoning inference going forward?
Well, we would like to serve all of it. And I think we're on track to serve most of it. Grace Blackwell NVLink 72 is the ideal engine today, the ideal computer thinking machine, if you will, for reasoning AI. There's a couple of reasons for that. The first reason is that the token generation amount, the number of tokens reasoning goes through, is 100, 1,000 times more than a one-shot chatbot. It's essentially thinking to itself, breaking down a problem step by step. It might be planning multiple paths to an answer. It could be using tools, reading PDFs, reading web pages.
It's insane.
Watching videos. And then producing a result. an answer. The longer it thinks, the better the answer, the smarter the answer is. And so what we would like to do, and the reason why Grace Blackwell was designed to give such a giant step up in inference performance, is so that you could do all this and still get a response as quickly as possible. Compared to Hopper, Grace Blackwell is some 40 times higher speed and throughput compared. And so this is going to be a huge, huge benefit in driving down the cost while improving the quality of response with excellent quality of service at the same time. And so that's the fundamental reason. That was the core driving reason for Grace Blackwell NVLink 72. Of course, in order to do that, we had to reinvent, literally redesign the entire way that these supercomputers are built. But now we're in full production. It's going to be exciting. It's going to be incredibly exciting.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for the question. Just a clarification for Colette first. So on the China impact, I think previously it was mentioned at about $15 billion. So you had the $8 billion in Q2. So is there still some left as a headwind for the remaining quarters? Just Colette, how to model that. And then question, Jensen, for you. Back at GTC, you had outlined a path towards almost $1 trillion of AI spending over the next few years. Where are we in that build out? And do you think it's going to be uniform, that you will see every spender, whether it's CSP, sovereigns, enterprises, or build out? Should we expect some periods of digestion in between? Just what are your customer discussions telling you about how to model growth for next year?
Yes, Vivek. Thanks so much for the question regarding H20. Yes, we recognized 4.6 H20 in Q1. We were unable to ship 2.5 billion, so the total for Q1 should have been 7 billion. When we look at our Q2 is going to be meaningfully down in terms of China data center revenue. And we had highlighted in terms of the amount of orders that we had planned for H20 in Q2. And that was 8 billion. Now going forward, we did have other orders going forward that we will not be able to fulfill. That is what was incorporated, therefore, in the amount that we wrote down of the $4.5 billion. That write down was about inventory and purchase commitments. And our purchase commitments were about what we expected regarding the orders that we had received. Going forward, though, it's a bigger issue regarding the amount of the market that we will not be able to serve. We assess that TAM to be close to about 50 billion in the future, as we don't have a product to enable for the China.
We've been listening in to NVIDIA's conference call. Let's recap NVIDIA's numbers now. The company reported solid earnings after the bell. Revenue rising 69% from a year earlier to $44.1 billion. That's ahead of analyst estimates on average. NVIDIA did take a smaller than forecast $4.5 billion write-down related to increased restrictions of sales of its chips into China, including that charge. Earnings per share coming in at 81 cents. That also beat comparable estimates. Sales in the current quarter will amount to $45 billion, plus or minus 2%. That's roughly in line with most analyst estimates. And that does include the loss of $8 billion in revenue from sales of those H20 chips, which it had been selling into China. And Jensen Huang talking about that Chinese market for AI being around $50 billion and highlighting the disadvantage that he believes not only the company is now put at because of these export controls, but that the industry more broadly is facing as a result of that as well. So those are the numbers, Josh. Seeing a positive reaction, obviously, in the after hours to those.
Yeah, I'm just seeing this post by Gene Munster here, who's a tech analyst that everybody on the panel knows. Munster is making the case that he thinks the stock should be trading higher than it is here, than 4%. The reason he says that, if you back out the impact of the curbs, he says year-over-year revenue growth in April would have been 79%, and the guide for July would have been 76%. Latest evidence, he says the company's growth will be higher for longer.
All right, let's bring our panel back in. We've got Bob O'Donnell of Technalysis. We've got Dan Newman here as well.
You guys
so
can
guys,
see the
really hearing a
pounds here.
couple things on that call. Really the emphasis that we've been hearing now kind of since the beginning of this latest wave of Nvidia. We can do inference, we can do inference, we can do inference. Can you guys do inference? Did you mention you could do inference? So they're really emphasizing that their chips are well suited for this
Still growing.
current stage of where we are in AI. And then, of course, the message from Jensen Huang himself that export controls are a bad deal for everyone concerned, he seems to think.
Yeah.
Bob?
Well, and the other theme he brought up, of course, was a theme we've heard a lot before, which is sovereign AI, right?
Yes.
You know, and doing sovereign AI wherever we can. So look, I mean,
and sovereign AI just means countries doing AI for themselves.
Literally, that's all it means. It's a very fancy sounding way.
Like governments doing
AI.
Exactly.
But look, I mean, I think all the positive points of opportunity for growth are still there. I found it very interesting, actually, that all the customer examples they talked about actually were enterprises. Remember, which is something I'm like, even though the absolute numbers I think are still small for enterprise, those were the examples they gave. They also actually gave a number of examples around robotics, which we also know is like basically just about zero revenue yet. So I think clearly the company is trying to tell the story beyond obviously that, yes, we can do inference and that we need to be in China. Hello, President Trump, you're listening. We need to be in China. You're cutting us off from $50 billion. Please don't do that. Then it's like, and here are the other growth opportunities. So I think they're trying to set the stage and tell the story around where those growth opportunities are by focusing on some examples, from those different sectors.
Dan, I'm interested to get your take, and we were chewing over this earlier, about the opportunity in the Middle East. And one, I wanted to get your sense of, is it possible one reason investors got so excited when they saw Jensen Huang over there and he's making these deals in Saudi Arabia and the UAE? Because did it potentially address one issue that the Nvidia skeptics on this show have brought forward? And you'll hear this, they'll say, well,
it's looking good right
maybe
here, boy. I'll tell you what,
2025
starting
is
to dip a little
really
bit.
the high watermark in AI spend. This is
Look
peak
at the
AI spend.
RSI though.
And maybe folks looked at the Middle East and said, well,
it's going down to
maybe there's some really
oversold.
deep-pocketed folks who can keep this party going.
Yeah, the AI bubble folks, the ones that said the party's already over, are entirely wrong, and they're going to continue.
Why
to
do you
be
say
wrong.
that, Dan?
Because we're just in the earliest stages. When you actually listen to what Bob was just talking about, the enterprise build out, the consumption, we're actually in the very earliest stages. The consumption, the inference opportunity, the reason Jensen's so focused on it is because the trillions of tokens that will be concurrently used to do agentic or to do humanoids, we haven't even started that. And that's what's going to really create this need for A, power, and B, more infrastructure. I want to take a quick step back, though, and talk about China, because the Middle East actually proved an important point. And it's that the U.S. is actually
All right, guys, I'm
going
gonna
to
take a break
AI
for a little bit.
around the
I
world
will
and
be
wants
back.
U.S. and
And,
Western AI to win everywhere, including in complicated regions like the Middle East.
We'll definitely go
China's
deeper
a different
into
animal. And I think it's
what
interesting
happened
because
today.
Jensen is saying all the right things for Nvidia. But for the U.S.,